Welcome back to Ferocious Education. This is that. Today I'm going to be talking about IBIO incorporations. I'm going to go through technical analysis. I'm going to go through an overview of their financials and then how I think the stock would be trading. So moving forward, please just drop a like to this video before we move forward. Subscribe and leave your notifications on to get the latest out of these videos. So first things first, we get to look at a MACD that is actually curving up, and that is a good sign that can give us a hint that it actually bottomed out on the 12th and the 13th. The MACD histogram is going on towards a bit more to positive, although that bottom down seems to be from the day before, so that seems where it's kind of seen a bit more reversal. Volume is still low, so that's a little bit of a concern there, but still looks like it's actually trying to get a comeback on it. Now on the ADX, it doesn't tell us much since it's coming in from a higher range. Now on the William percent R, we're seeing an oversold stock. It has been oversold for quite a bit, but we still see it at a good level. Momentum seems to be actually picking up. The stock is having an almost exact same momentum back as on the 7th, and almost the second highest it has been for a month. Now going on towards moving averages, here's where it gets a little bit dangerous. Stock is under the trading action zone and it has been after the 10th, or actually in fact after the 7th. If the 30 EMA does curve above the 10 SMA, technically it is bearish. The stock is below the 50 SMA, which is also bearish, but it's above the 200 SMA, which is bullish. So we need to look a little bit closer into the 1 hour perspective in order to determine what the movements are. So we get to see here basically moving averages, the 10 SMA, 30 EMA, and the 50 SMA are basically all touching at the same level. Not something bearish or bullish, I would say. It's just something interesting where it basically can ripple either ways. Nothing significant happening here, in my opinion. Now, it basically all it does say that it's trading sideways on the 1 hour perspective, and it's trading in around neutral. So we need to look a little bit towards supports, resistances, and a little bit of a feel. Now, Friday has been, well, last week has been a little bit of a reddish week for some people. So that is a bit more expected to have that kind of reaction in this week. Now, you get to see here that the stock is trading below the moving average band. So that is as well as another thing that we're looking at. Stock 30 EMA and 10 SMA is currently touching, as I said before. Stock is expected to trade between the $4 and the 48.2 mark based on the moving average band, but you can see that it's way below that, so that is a little bit more dangerous than you can anticipate. Now going on towards the supports, the current support is sitting in at traditionally 259, below that 254, or sorry, 257, 254, 247, and then right below that 245, 240, and then believe I cannot see this, but there we go. 239, and then 238, and then 230. Well, on the Fibonacci retracements, it's 235, and then you see a low of 230. Now going on towards resistances, what we get to see is a resistance at 265, 263, 265, 268, 270, and then 274, 283, and then 288, 294, and then 297, 299, and then it jumps up to 309, and then right away to 368. There's a bit of a jump there that is happening. Going on towards trend lines, and that's a little bit important for me. We don't get to see any much of a trend line. Now this does look like an inverted cup for me here. A little bit dangerous, but still might be still a little bit of a good swing, and I'll tell you exactly how I'll play it. Trend line, it has been broken already. So the current new trend line is basically the bottom that we anticipate that is actually the bottom, happening right around here. So it's a whole new trend line. It basically has erased quite a bit from 745 all the way down, but we need to look a little bit into current coming news. So here's something that is a risk for the stock, and I'm not saying this for you just to sell, just to understand that there is risks, and I'd always address them. Now they do have 424B5 forms that are actually up. And what this means is it's not an offering per se, but it's a shelf offering, and they do have an increase of additional 27 million shares to sell. So that's one thing there. Another 424B. This is, I believe, an agreement of 50 million shares. And then On the 8K, it does to say about basically the 72 million shares that can be sold. So here's the thing with this one of 45 million shares, and this is just basically I'm just trying to go back and click on the most recent news. I'll go through quickly the 10K, but basically what I'm actually seeing on here is a little bit more of a danger for offering. Now, why would they do an offering before PR that releases the price up? They would be crazy if they haven't. If they do it right now in the coming days, I would do expect that. Usually, what happens is they try to make it run. They release positive PR and then drop an offering. And I know it's really a bit more off a savage way to do it, but usually you don't want to kill your price, especially for a stock like this that is trading around 260. It needs to stay above that 250 mark, $2 mark in order to make sure it stays in compliance for long term. I know the price is $1, but you know things happen with PRs and market crash. That's how a CFO would think. Now going on towards the cash on hand, you get to see that they do have more cash than the year before, around $10 million dollars in cash. So that's good. Total current assets around 10.3. So that's definitely amazing when we're looking at it. Total assets 42 million compared to 30.5 million. So I don't see why they would need more cash, but remember we're talking about millions here, right? So 10 million for me or you could be a lot, but for them in terms of the running operations, we need to look at the running costs. Total current liabilities is sitting around 6.17 million. Total liabilities is 38.2 million, and you get to see here that they do have a good ratio between total, well not really good ratio. Total assets is still very close to total liability, and that might be a little bit something where they want to raise more money to pay off the liability. That is something. Now part of that would be, believe, well, okay, we're just gonna skip that here. And then we're going on to total liability and equity shares. They are on positive around 42 million, as I said, compared to 30.586 million. Revenues here, we've seen a decrease in revenue going on from 96 million compared to, 96,000 compared to from 527,000. Operating loss has increased, but that's my understanding is due to developments for the COVID-19 kind of part of it, and I'll go into that in a bit. There is a bit more strategic changes that has happened there, but the weighted average for common share, basically the loss is 0.06 compared to 0.22. That mainly is coming in from different things. So the comprehensive loss is 4,677 or 4.7 million compared to 4.2 million. But when it comes to diluted per share, it does look a lot less because they have more shares in the company. So even though they did a worse in terms of the current operating comprehensive loss, but their EPS goes on less because they have more shares. Usually it's a little bit more of a marketing thing, or sorry, accounting. Cash paid during the period of interest is 1.7 million, so that's still a little bit less there than you anticipate. Now what I'm trying to go through is basically their net loss. So their net loss is sitting in somewhere around, well, the comprehensive loss is 4.6 million, and they do have cash on hand around 10 million, and then you're running in on operate, so you basically have at least the next quarter. If they continue the same operations before, for instance, an offering or raising more capital would be there. So I would say until quarter 3. Now, institutional buyers, what you get to see here is it's a bit more mixed. A lot more shares coming in than leaving, I would say. So shares changed 80%, so that's a little bit off. I think it decreased 425. So they add BlackRock added 4 times the amount of shares. Urine added 280,000 shares. There's a little bit of shares sell-offs here by Exodus, Amaritis, and Pathstone. But you get to see here companies like, for instance, Northern Trust has doubled their position by almost 10 times. Millennium Management have decreased, and you get to see a bunch of others have increased. So it's a little bit more mixed, but I see more addition than subtraction of positions. That is a good sign. Now going on towards quickly the PowerPoint, and you get to see here that they do have different parts, right? So they have the 3D bioprinting, CDMO services, fast farming, IBIO antifibrotics, and IBIO 200/201 COVID-19 vaccine. nothing significant towards their cash burnout rate. So hopefully no offering. But there is also PRs coming in, for instance, like the IBIO versus Fraunhofer going on for scheduling in from late 2020 or 2021 due to COVID-19. So that's expected sometime soon. What else we're looking at? There's another one up here. Find it quickly. Going on towards, okay, so vaccines, fast farming system, CDMO services, and biologic company. There is other PRs that could come out of this one here, related to their progression. So other than the trial there was another one that is slipping off my mind, but that's not due to end of 2020. That's a little bit further off. So, yep, so there's rescheduling for this, January 2020. Okay, so moving on. There's the update on the 2019 it was the vaccine developments, and there is still on an update for this one yet to come. So that's still positive. Now the anti-SARS-CoV-2 spike basically were observed to 20 days after immunization. They continued to increase over 42 days of study. Distinct favorable Th1 and Th2 immune profiles were observed. That is basically good news in my books, that there is developments, and we can hear as well a bit more. Going on towards what positions they have available. So manufacturing technician, process development scientist, director of manufacturing, senior facilities technician, senior manager of facilities and maintenance, and project management office director. You get to see a lot of these have been posted 5 days ago. So it does show that the company is progressing in terms of growth. And you get to see the company-wide growth has basically an increase of around 7% from last month, from month to month. Now, they did have a bit more decrease in around late last year. And around January, they did have a decrease, but you get to finally see an increase from month to month starting from June. And that does show growth in terms of the company there. So how would I play the stock? It's definitely a scary thing when you see a stock dip like that in more of an inverted cup kind of shape. I would definitely want to see it bottom out, and it looks like it did bottom out around the 235. I would like to see it accumulate for a couple more days where it stays around that trend, and then I'll consider buying it. If you already have the stock, I would definitely, or if I had this stock and I bought it before, it is a hold for me, but it's almost consider buying in the next 2 days if the price stays above the 235. There is a risk with offering, like a lot of other stocks. But that's still a risk that you need to consider, and that's what I think about the stock. What do you think about the stock? Make sure you mention down in the comments below. Share, subscribe, and like. You have a wonderful day.